Welcome to today's show, everyone. My name is Lark, and I'm super excited to have back on the show Dan Held. Now, he is the head of growth over at Kraken. He's a Bitcoin OG as well, so I'm super excited to have him back on the channel. Dan, how you doing?
Lark, it's great to be back. Appreciate you having me on. I know we've had a couple Twitter debates, and I'm excited to dig in today and cover these topics.
Yeah, we're going to be diving into a lot of great conversations here. We're going to be talking about kind of this trend that we're seeing with big companies getting in, what the banks are doing. We're going to be talking about the correlations we've seen this year to stocks and gold. We're going to be digging into the Bitcoin security model. So this is going to be a real juicy conversation. Diving into Lightning Network if we have some time as well. So make sure to stick around for the whole conversation. It's going to be a great chat. The last time you were on, it was such a great chat as well. And I just want to mention as well, Dan's starting his own YouTube channel. So, he's definitely just got such a great voice in the Bitcoin space. So if you want to kind of hear some more of that, you definitely need to check his channel out. So I'll leave a link down to that in the comment section as well in the description. So you can go over there and check out his YouTube channel and hear more of these kind of great thoughts on Bitcoin. But Dan, I want to start off our conversation today because there's just been so much big stuff happening. I feel like 2020 has been like just wow in so many ways. We started off this year with this kind of big crash in the markets. Ever since then, it's just been big story after big story after big story. So let's start off with this whole conversation around companies buying Bitcoin. MicroStrategy made a just massive play buying just incredible amount, 425 million worth of Bitcoin at the time. Obviously, they're up like 30 or 40%. They made like $100 million, in fiat on their play already. And we've seen Square come in, put 1% of their cash reserves in. So what's your take on this? And what do we need to see happen to get other companies actually on board with putting a bit of their cash into Bitcoin as their strategic reserve?
Yeah, so it's been fascinating to watch this happen. It's funny, like I've been a Bitcoiner since I bought my first Bitcoin in 2012 when it was $10. If you would have told me that corporate treasuries were going to start buying Bitcoin, that would have blown my mind. I mean, this is pretty wild stuff. Like, I think a lot of Bitcoiners often go, oh, well, what if a bunch of retail traders buy Bitcoin after me? That'll make the price go up. Like, for example, that's the basics of any trade is I buy it in anticipation of others buying it in a higher rate of demand. So more and more folks realize Bitcoin's value and number go up. Well, people forget that companies can buy it too. And there's $5 trillion in cash equivalent treasury holdings across US companies alone. $5 trillion.
It's
What
incredible.
happens? Yeah, what happens when these companies go, okay, I can put my money in bonds, I can yield 0.1% interest in like a corporate version of a savings account, right? So CDs or other instruments that they might be able to access short-term or cash-like sort of investments. That's nothing. I mean, these companies are earning nothing on their money, and companies like Apple and Google, they alone have like $200 billion. They should be putting that money to work. But if they don't put that money to work, it should be used as a way to either hedge or ensure that there will be stable cash reserves for downtime, for downturn events. So, for example, a recession, they can tap into that cash reserve to survive through a winter, right? So this is a huge new thing. I think that the real impediment to more companies doing this is it's a chicken and egg problem where MicroStrategy and Square were the first companies to do it. There was a lot of reputational and career risk. So a CEO, when they look at this, there's a lot of downside and not a ton of upside.
Mm-hmm.
Typically treasury management is not, I don't think it's something a CEO typically weighs in on. They're looking at growth and execution and revenue. Managing the cash reserves is more of a back office function. So them inserting themselves into that process isn't going to get them a giant bonus, I don't think. It's more of they really want to look at their whole business holistically and start to ask the right sort of questions. So I think Square and MicroStrategy have done the first step. They've made it palatable. Jack Dorsey is a really well-known CEO, well-respected in San Francisco and the Bay Area. So him doing it is a mark of trust. It decreases the career risk, which then enables more companies to do it. As Bitcoin's price goes up and Square and MicroStrategy's purchases become more in the money, so essentially they're profitable, then they're going to look like geniuses.
Mm-hmm.
And the rest of these CEOs now have a very strong example, and they can go point at Square and MicroStrategy and go, look, they did phenomenally well. They were really prescient. They could see this future. We should start to think about putting just a small amount of our treasury in.
I think it's a really big power play for these smaller companies too. I mean, outside of certain circles, not a lot of people would have known who MicroStrategy was before they made this really bold play with their cash reserves. I mean, Square is much more famous as a company, obviously, and Jack Dorsey is quite a well-known personality. But I mean, now a lot of people know who Michael Saylor is, and they definitely have MicroStrategy on their radar as a company. And obviously, people have been investing in the stocks as well as kind of a vicarious way of gaining exposure to that Bitcoin as well. And so it's very interesting. There's a lot of upside now that we do have the social proofing in play for companies to come in.
Totally. It's totally leveled the playing field down to where if no CEOs did it, then being the first CEO is a really risky maneuver. It takes kind of a bold, courageous character to do so. Michael Saylor is definitely that sort of guy. I just interviewed him on Friday for Kraken, the company I work at. It's a big exchange in this space. We had a webinar series where I interviewed him, and we basically went as bullish as you can get on Bitcoin. So if you're a big Bitcoin bull, check it out. We just jam on different Bitcoin things. But Michael's a character. He understands. I think he had a lot of fundamental, layers to his understanding of the world. And then he saw Bitcoin, and because of that previous experience, he was like, "This makes sense." For example, like he bought and sold a lot of domain names, including Voice.com. Voice.com sold EOS. He was the one who sold it. He understands digital scarcity. So there's different folks who, when we all find Bitcoin, we each have our own history of ourselves living in this earth, and we have a background that was built based on our subjective experiences. So his, I think, was kind of a ripe background, a perfect background. So when the seed of Bitcoin came along, he was easily incepted in his head. But it takes a courageous CEO to be willing to risk that much money, and I think he's kind of he's got the cowboy sort of get it done sort of attitude. He's willing to take a little bit of risk, and it takes a certain type of person to do that. But now that he's done it, I think that lays the framework, the groundwork down for further CEOs to get in.
Nice. It's one of those places going to go down in history. We're going to look back in 10 years and go, wow, that guy made a good call. Now, I want to move on to the next topic of our conversation here, because this has kind of been the new big trend closing out in Q4 here of the year, is these massive institutions getting into Bitcoin. Now, PayPal, obviously, we had the rumors about 2 or 3 months ago that they were going to be getting into crypto. Now they've come out, they've confirmed it, they've launched the service to a very limited number of people to start off with, but it is available for some people to actually start buying and selling Bitcoin and 3 other cryptocurrencies, including Ethereum, I think Litecoin, and Bitcoin Cash maybe as well on the exchange. And obviously PayPal's massive, 346 million customers globally. A good portion of those are in the US. And within about 10 to 12 days of PayPal's big announcement, we saw JP Morgan saying, we want to do custody for crypto assets. We saw DBS, the biggest the biggest bank in Southeast Asia, saying, hey, we want to do a cryptocurrency exchange. We see TDB Bank in Mongolia, biggest bank in Mongolia, saying, hey, we want to sell crypto to our customers. Gazprom Bank, third biggest bank in Russia, wants to start custodying and selling Bitcoin to their elite customers. And this is just like this tidal wave of stories coming now on the back of this. So what's your take on all this?
Yeah, again, I think a lot of this is about career risk, right? Like once these treasuries started to dip their toes in, once PayPal dips their toes in and Paul Tudor Jones, they're starting to de-risk the trade. They're starting to de-risk the career risk of someone being the first person to go, hey, I think we should do this at our company. Now you've got really big names behind it. So, on the investor side, Paul Tudor Jones, Susquehanna, and I think there's a few others I'm missing. And then the corporate treasury side, you've got Jack Dorsey and Michael Saylor with Square and MicroStrategy. And then on the fintech player side, PayPal, and people forget that SoFi has been into crypto for a while. I'm actually close buddies with the head of this crypto SoFi team. So, SoFi is a big fintech player. PayPal is probably the biggest or most well-known. And then, on the banking side, we've got JP Morgan that used to hate Bitcoin. Now they're going to Bitcoin companies. So, you're starting to see the career risk come down. They can't ignore the potential here. They can't ignore how much money is going to be made. They have to start servicing this need of their customers, which they want exposure to Bitcoin. And so they're just going to have to offer it to them, or their competitors will. It's a fun game theory of like, you don't even have to like Bitcoin. Your customers do. Mm-hmm. So if you don't offer it to them, someone else will.
I've speculated with PayPal that there's kind of two things that maybe pushed them forward into their decision to say, "Hey, we got to start doing this Bitcoin thing." One is, of course, looking at Cash App and looking at how much money they've been making with their Bitcoin play, because those are some big stories people might forget, but it was a very, very big story in Q1 and Q2 of this year. Just how much money Square made by selling Bitcoin through the Cash App. They made incredible amounts of money doing that just in the first 2 quarters, right? PayPal saw that and said, we're missing out. And I think the other thing is that kind of really famous story of when Netflix went to Blockbuster and said, they were talking and they basically laughed them out of the room, said, that's never going to be a big thing. You people are ridiculous. Get out of here. We're Blockbuster. And then, the history tells the story of how that all played out. And I feel like this is kind of PayPal's attempt not to get blockbustered.
Agreed. I think, tech companies are typically trying to be, they've seen this legacy of all these older tech companies that have come and gone, the MySpaces, if you will, and they always want to be forward thinking. So I think with PayPal, this must have been in the works for a long time, right? PayPal's a big, big old tech company. They must have had to plan this out, but I think they still saw the writing on the wall. They were still like, okay, well, this is starting to happen. How do we get in front of this? How do we react to this? That's where what's going to be wild in this next book. I've been around since so long that Mount Gox was the place that I bought my Bitcoin at, and it took me a week to get money wired over to Japan. It took forever. I used to use a service called Dawala. I don't know if anyone remembers what that is. Honestly, I forget exactly what it does, but Dawala is this intermediary I can use to send money over to Japan. And it took forever, and then also didn't know what an order book was back in 2012. I was like, okay, I just want to buy some Bitcoin. And to see the interfaces and the liquidity and the infrastructure improve so much till now, and also the reputational buy-in of these big companies, it's astounding. I mean, I think it's never been a better time to own Bitcoin from a risk-reward perspective.
Mm-hmm.
Sure, my return earlier on will likely be higher than future returns. I'm not sure if Bitcoin will 10,000x again or something, right? But the risk that I took, I mean, we didn't know what was going to happen. I think a lot of people will go, oh, well, you guys were like super lucky. You bought Bitcoin at $10 or $100 or even $1,000, which is funny to think that $1,000 is cheap. Oh, you must have known it was going to succeed. And it was priced that way because we didn't.
Mm-hmm.
People thought it was only worth $10. If the market had felt that it was worth more, it would have been worth more. So to see all of that de-risking happen, also with like a civil war with Bitcoin Cash, that demonstrating a very resilient Bitcoin community. That's a good thing. It's a good thing to have a resilient community preserve those cultural values that keep Bitcoin valuable. So I think a lot of that risk is now off the table for Bitcoin. Bitcoin just has to keep on keeping on. It doesn't need to go launch a new scripting language, a new this or that to be able to be competitive. It's already winning in its category as a store of value.
Mm-hmm.
It doesn't really need to do much to innovate there. Maybe little tweaks here and there, like with SegWit or Schnorr signatures. So I think like it's very small incremental improvements. With some of these other crypto assets, they have to really, really outperform. They got to define a whole new category and execute with that for it to be successful. Which I think you could have a nice return if they go execute and do that, but the execution risk is very high because blockchains are inherently very risky and there's a lot of components and it's tested out in the wild, right? You've heard about these hacks with different other protocols, and even storing custody is a hard problem with Bitcoin and other coins. But then you add all these other layers of risk on top of the custody risk on protocol, and things get complicated really quick. So I think it's never been a better time from a risk reward perspective going Bitcoin. It's phenomenal. I mean, I'm sitting here with us at around 13, 14K, depends on the hour, and I look at our outcome and I'm like, this is the most phenomenal setup you could ever ask for, especially with COVID. Post-COVID, money printer go burr. I mean, if it isn't apparent now, if my primary hypothesis with Bitcoin is that it's gold 2.0, that when I first entered my position in 2012, I bought it because I'm like, this solves the store value problem.
Mm-hmm.
And all that is required for this to appreciate in value is other humans will come to believe what I believe in. In that fundamental premise rests in the fact that people will choose to preserve their value. So
That's it.
I think
As humans have done for thousands of years using gold, and now we have the digital equivalent that it's more portable, and there's all these great features that make Bitcoin very, very attractive. And it's very interesting what you kind of brought up there is that the current price of Bitcoin's really a reflection of just this growing confidence within the social proofing of Bitcoin, right? The more people feel it's a comfortable investment, it's something they can believe in, it's something they can store their wealth in long term, it's something that will have a future. The more people buy it. The more people buy it, we see what's been going on all year long. The amount of Bitcoin on exchanges just keeps falling and falling and falling because people are buying it, they're taking it off exchanges, they're putting it in their cold wallets, and that is where it is staying. And that's a very powerful thing that's happening right now because this is long-term believers getting into Bitcoin because they want to store their wealth in the world's premier digital asset. Now, I want to just move the conversation a little bit here. We've seen this year Bitcoin having very high correlations to the stock market and very high correlations to gold as well. Now, gold makes a lot more sense, store value, all that fun stuff, but the correlation to the stock market, I think, has had some people a bit worried. So what's your take on this really high correlation we've seen this year? I know we've been breaking away a bit recently, but most of the year we have been pretty closely tracking with those markets.
Yeah, good question. A lot of people bring this up. It's a common question I get in my replies or DMs from a bunch of people online. People are asking me, Dan, why is Bitcoin correlated? Including including a very famous person. I can't mention who it is, but I was surprised to even get the DM.
Interesting.
So, yeah, it's a question that a lot of people are thinking about. Okay, so if Bitcoin is supposed to be this risk-off trade to where it's a safe haven asset, why is it trading with all these like risky assets like equities and whatnot? Currently, Bitcoin is perceived by the market as risky. It's a speculative store of value. It is an up-and-coming one. It is not yet a gold. Gold is 4,000 years old in terms of used as a store of value instrument. Bitcoin has a little bit of time left, as in decades, so generations, to permeate the consciousness and become a well-recognized store of value. So until then, it's treated as a riskier asset, and that's why we saw it become correlated. Is partially because it's still risk on, and then the second portion of that is that Bitcoin, like equities and even gold, during the March time period, when everything sold off, that was a liquidity crisis. So everyone was trying to hit the exits and go into cash because they're getting margin calls. So they're selling all of their assets to meet those margin calls because they were levered. And because of that, anything that wasn't cash sold off. So when that happens, everything becomes correlated. And that's what we saw in those moments. If you look at like trading view charts, when you look at that March time period, everything became correlated in that same moment. As the year progresses and concerns over inflation start to sink in, so we had a liquidity crisis in March. That's what that was. And then we're going to have a concern around inflation or deflation later this year, early next year. And that's where you're seeing gold and Bitcoin start to decouple from the equity market. For example, Bitcoin over the last couple of weeks has really started to decouple from the mainstream markets. It's really starting to surge. And why did a certain event happen over here? It's hard to tell exactly what was the catalyst for that. These things take a long time to become priced in.
Mm-hmm.
Some folks believe that Bitcoin will never reach $1 million per coin or $100,000 per coin because of efficient market hypothesis, because like all expectations over Bitcoin's future performance have been priced in. While I'm a fan of EMH, I think EMH is more descriptive of the current price. It's not a description of the future price because right now only 0.1% of the world has priced Bitcoin's realization in. Like only 0.1% really believe in it, maybe not even that much. And so what happens when 10% believe in it? That changes the information, that changes the aggregate belief in it, which then changes the price. So I think when we look at Bitcoin, it's still very much risk on. During March, it sold off like everything else and became highly correlated due to a liquidity crunch. Everyone was selling to meet margin calls. It's in a much stronger position now. I think gold and Bitcoin in 2021, especially post-election, US elections are tomorrow. It's going to be a pretty big event where if you look at options pricing, Biden, he's being priced into the market, and his impact is being priced in as a positive because he will spend more money. money printer will go burr,
Mm-hmm.
and the Democrats will likely go burr at an even faster rate than Republicans, and they're both burning at a rate that we've never seen in U.S. history. So,
An
so
incredible amount of money.
insane amount of money, and that's where when people are like, "Oh, Bitcoin at $100,000, oh man, that would be $2 trillion market cap." I'm like, "Yeah, we just printed that much last week alone."
That's right. And that's only like 20% of gold, so
Right,
it's not that crazy either.
totally. Yeah, it's pretty wild. So, I think we'll see gold and Bitcoin start to really outperform in 2021 when those concerns over, wait, what's going to happen with the value of all these assets, gold,
Mm-hmm.
Bitcoin, real estate, equities, you're going to start to see that priced in as people and as inflation concerns become priced in. So I think it's going to be a dramatically different performance that we see in 2021. I mean, Bitcoin has still had a great performance this year. There was
It's
that
incredible.
momentary dip, but it bounced right back from that. And I think that was more of an auto liquidation engine issue on BitMEX rather than a
Yeah.
true price. Yes, it did print that, but on other exchanges it didn't, and it was so momentary that it's really hard to say that that was a real price. So yeah, I think we're going to see Bitcoin and gold really outperform in 2021 is the TLDR of my thought.
Nice, nice. I like it. Now, I want to kind of dig in now a little bit talking about the security model of Bitcoin. We were having an interesting exchange about this on Twitter a few weeks ago, which kind of was the inspiration for today's chat. And I think it's one of these topics that, people, we see a lot of criticism around it. And, we have good models for it based on where we are today. And, we can see where this might be going, right? But, in a bit of a sense, maybe it's all long term, still an experimental economic model to the extent that we can consider it like that. So I want to ask you this. Do you think that Bitcoin's security model is going to be sufficient when the block reward drops under 1 Bitcoin per block in 2032?
You want me to give a brief description of the situation for the audience as well? You think
Yeah,
that'd be useful?
absolutely. Absolutely.
Okay. So I've tried to do this a couple other times. Hopefully, I can keep it compressed enough that makes sense, and we don't. It's a little bit of a tricky topic to parse out. So, the block reward is what is given to miners for expending the proof of work. So the miners purchase machines, ASICs, and they pump electricity through those in anticipation of getting some percentage of the block reward. That percentage is determined based on how many other people are competing for that block reward. Now, the block reward is comprised of the newly minted Bitcoins, which are called the subsidy. It's the Bitcoin subsidy or the newly minted Bitcoins and transaction fees. Now, as Bitcoin matures over years, this is determined by number of blocks, which roughly is equivalent to every 4 years. The supply of Bitcoin, the production of the issuance rate of it, decreases by 50%. So the subsidy, the newly minted Bitcoins in each block, drops in half. Now, the concern is that over time, as that subsidy decreases, is that decreases in an exponentially decaying function, that transaction fees won't rise to compensate. And the problem, the issue that would happen there is that miners then would not have a proper financial incentive, wouldn't have a proper financial incentive to secure Bitcoin's ledger. So the newly minted Bitcoins and the transaction fees in that block reward that are given to miners, are given to the miners so the miners behave honestly. The miners expend the proof of work, receive the reward for structuring transactions in Bitcoin's ledger in a good manner, and they don't misbehave. What's cool about the game theory behind this is if they misbehave, then their payment, which is in Bitcoin, because if they misbehave, they damage Bitcoin's value. And if they
Mm-hmm.
try to reorganize transactions, but their payment is done in Bitcoin. So they would hurt their own future cash flows. They would shoot themselves in the foot. And they've already spent all of this money on these machines. So that's the game theory that protects Bitcoin's ledger, is that these miners care about money. The only way that you could really hurt Bitcoin in this circumstance is if you purchased all of these miners and you determined that you wanted to burn the money. You didn't care about not being paid out. You were willing to burn X amount of value to reorganize transactions, and you didn't care about the block reward. That's essentially the TLDR of the argument. Will we be able to compensate miners enough to where they won't be tempted to reorganize transactions, or it won't be cheap enough where a state actor might choose to burn $1 billion and destroy Bitcoin's network for the organization of transactions? There's a lot to unpack here. So over time, even though the subsidy has decreased in the newly minted Bitcoins, the value of each Bitcoin is tremendously appreciated.
Mm-hmm.
So, when we look at the block reward US dollar value over time, it's never been higher. So Bitcoin has never had one of these reorganization attacks, like a successful one. So, the problem is that we don't know what an appropriate level of security is. It's somewhat of a subjective thing. It could be a percentage of total volume on a monthly basis. It could be annual volume. It could be a certain threshold where over $10 billion in block rewards is a secure system. I think that's the crux of the argument, is no one knows. I like to look at it a couple different ways. One, historically, we've seen the block reward increase in value massively over time, and we haven't seen it occur previously. If it hasn't occurred previously when it was weaker, and it's growing stronger, and we anticipate it growing even stronger from here, then why would we feel that it's not adequate in the future? So that's one way I like to think about it. Another way is that, if you model this out, which I've done some very rough approximations, I'm not a data scientist. I worked with a couple folks on just creating a very rough trajectory. If you look at, over time, like over the next couple decades, what the price inelasticity of a transaction on the Bitcoin ledger will be, fees can go much higher from here. With Ethereum, we saw fees kind of approach the level I'm anticipating with Bitcoin. I think Ethereum got to around like $30 to $50 or something. I
Yeah, for using like smart contracts, it did. It got quite crazy. For the basic transactions, were allowing $5-6 to move just Ethereum across the network. But yeah, the smart contract fees were quite high.
Right, and the worry is that when Bitcoin starts to have fees that high, that will create a loop where folks won't move coins, or Bitcoin diminishes in value. I think the fundamental premise here is, like, if we look at traditional sort of payments, so if you set up a wire, that's $20 to $40 in the US. If you send money overseas, it's a lot more than that. And if you do a real estate transaction, which is another store value asset, or gold, those physical delivery costs are massive, huge. If you do offshore banking, getting an offshore bank getting set up, that's a lot of money. Bitcoin competes with those. So that's what I would look at, is like, what are people willing to pay to set up those services? That would be Bitcoin transaction fee uppers limit. That would be, as a store value asset, that's where if we went above that, then I'd be like, okay, we might have a problem here where people won't pay that. But Bitcoin competes with those services. And if Bitcoin offers a superior service, which it does, and it has a transaction fee that's lower than that, then I don't see why people wouldn't use it. So that's kind of a core fundamental part of my argument. Second is that if we look at transaction fees as a percentage of the block subsidy, are transaction fees replacing the subsidy over time? And that's the other concern, is that transaction fees, while the subsidy is decreasing, transaction fees are not compensating, but they are. The transaction fees do compensate. They are compensating over time for the decrease in the subsidy. And so this is taking the US dollar value of Bitcoin transaction fees in a block, taking that and putting that over the US dollar value of the subsidy. And we're seeing that trend very much in the right direction, to where in the next bull run, due to the fixed number of or relatively fixed number of transactions that can enter a block, since the block size is somewhat fixed, you have an increase in demand, which increases fee pressure. And I've got a feeling we're going to see a lot of blocks where the subsidy is far stripped out in terms of fee pressure, to where transaction fees will represent a much greater value than the subsidy. We saw this happen in the last 2017 cycle momentarily, whereas the subsidy was eclipsed by transaction fees. I think in this next one we'll see that as well. The unfortunate thing is that this is a protocol, so setting individuals' expectations around this, I think, has been done very poorly, both for Bitcoin and Ethereum and other chains. Transaction fees, if it is a popular chain, will rise. That is the whole point. Transaction fees must compensate for the subsidy decreasing. If that occurs, that means that a lot of other use cases are priced out of that blockchain. So for example, with Bitcoin, there's just basically one primary use case around store value, but there was a secondary use case that a lot of people championed, which was peer-to-peer payments for coffee.
Yeah, well, the medium of exchange, right? And you're not going to do that if your transaction fee is $30.
There you go. And so with Ethereum, we saw a similar issue where Ethereum was touted as this utility that could represent all of these different use cases. Not really. I mean, once those transaction fees go up, you ain't going to be CryptoKitties that cost $10. Like if the CryptoKitty itself is only worth $5 or $10, then you don't want to pay a $10 transaction fee. Essentially the most price inelastic bidders for the block space, because the block space is this finite amount of space, and you have a demand side of the market bidding to get their transaction in the block. Only the ones who have the highest value transactions will be able to afford the fee, because the fee as a percentage of the transaction's value will be the lowest. And so that's a systemic problem we see with both chains. With Bitcoin, I think the narrative has solidified around store value quite pretty concretely. There's a small remnant of the payment side, but I don't see that narrative surviving this next bull run. It's just impossible to even say that that's a potential use case when it's just not possible on layer one. Layer two, sure, maybe with Lightning, but with layer one, it's just not going to be possible. So yeah, if we look at all the available metrics, seems to be looking to be trending in the right direction. We don't know what an appropriate level of security spend is. That is a subjective thing. Bitcoin this hasn't been an issue in the past where the block reward was smaller. The block reward will increase dramatically, so it'll become stronger and stronger over time. It's sort of a subjective thing, but if we look at the trends, it seems to be trending in the right direction. I think we have much more room to rise in terms of transaction fees. I think Bitcoin transactors will largely accept these fees, and so I don't see a big deal with it. Some other communities look at, if they look at transaction fees, and it's kind of funny because they put Bitcoin in an impossible spot. Transaction fees are too high, no one's going to use it. Transaction fees are too low, the security model won't work. Bitcoin can't win. So it's this constant source of FUD. Like with the Bcash community, they had the Bitcoin fees are too high. And then with the Ethereum community, they're like, Bitcoin fees are too low. So Bitcoin can't win. And at the fundamental, the core root of it is that it's a market.
And that's it. And if people are willing to pay the price, people are going to pay the price to make a transaction. That's what it really comes down to. And if you're not willing to pay that price, well, then you wait.
Totally. Or if you don't value Bitcoin's settlement features, if you don't think storing value in Bitcoin is valuable enough to pay the transaction fee, then that would be a problem. But it's a free market, and I just don't see a situation where folks won't want to use Bitcoin, with fees that could rise 10x, 20x from here. I think if we look at these other common services that Bitcoin competes with, this is well within people's, people will be willing to pay this amount for offshore banking, for wires. So I don't see why it'll be an issue for Bitcoin.
I got a few interesting ideas to posit here for you in terms of this. We're seeing, I think, what we could call an increasing paperization of Bitcoin. Grayscale, for example, right? They're acquiring record amounts of Bitcoin, and that all gets then they hold it. They don't move it anywhere. They just put it there and they hold it, and they convert it into basically paper stock contracts, right? And sell those to people. PayPal's service, right? That's very exciting, but they are not offering deposits or withdrawals. So you can see them buying up, let's say, 1 million Bitcoin, right? In the craziest example. And then we've got 1 million Bitcoin sitting with PayPal, and it doesn't go anywhere. It just sits in their vault, right? And the people who use it within their ecosystem, it's not getting withdrawn or deposited. So do you see the paperization of Bitcoin as being potentially a threat to this long term? Because they won't be using the blockchain to exchange these contracts like we see with Grayscale. They're using the stock exchanges to do it.
That's a phenomenal question. I think you understand all the nuances here. If you're asking a question like this, you understand the deep complexity behind this and ultimately what Bitcoin's valuable for. Like Bitcoin is a settlement system where I can store my value in it and I can trust in the settlement guarantees that the blockchain provides. The blockchain provides me a guarantee that after X amount of confirmations, I can be very, very certain my transaction will not be reversed. And so that's a settlement mechanism. Due to the price of the average cost to settle, essentially how much does it cost to get my transaction embedded in the Bitcoin blockchain, I see that very much crowding out the smaller transactions. And I do see a future where, I think Nick Carter's referenced this as well, like PayPal and Grayscale, those are technically like scaling solutions. They're centralized ones. You could call those like L2 technologies, like layer 2.
That's an interesting way to look at it.
Yeah, it's kind of crazy, right? To where ultimately we might see these layer 2 solutions that come from like corporates, like for example, Robinhood, you can't withdraw or deposit your Bitcoin, but Robinhood does buy Bitcoin. So they must buy and sell it. And so they must settle on chain because I'm pretty sure their partners who they trade with likely don't want to have to trust Robinhood. So they'd rather settle, they'd rather settle on chain. For example, if I'm a liquidity venue providing Bitcoins to Robinhood and also Robinhood selling, I'm not just going to trust Robinhood. I want to have it settled. So I think, we look at these as scaling solutions. What's kind of nice about these corporate ones is that they could subsidize transaction fees. So for example, since PayPal is representing transaction fees on behalf of like 400 million people, they're very pricing elastic to have the transaction that represents 5 million people, the net settlement value, settle on layer one. So I think that demonstrates a strong bid or strong demand for Bitcoin block space. These big corporates will eventually have to settle with other big corporates, and they'll have to settle with banks or exchanges like Kraken. And Kraken, we want to do it on chain. When you deposit your coins with us, we are going to wait for a certain amount of confirmations because we trust in the settlement mechanism that the Bitcoin blockchain provides. So I think that indicates a very strong bid for block space. I think it's a little bit unfortunate for the individual investor where, moving Bitcoin will become a very rare event for most people. It'll be something you want to be very cautious about where you've got your life savings there, but only once in a while do you move it due to the high layer one transaction fees. Similar to a wire, we don't wire money to our friends because you only do very large amounts due to how much it costs. So I think, it's an interesting issue too, because you could look at like, well, if big corporates decided that they don't care about Bitcoin's layer one or care about Bitcoin's settlement mechanism, then they would be fine with settling with each other. That gets pretty scary, where it's like, well, what if they just rebuilt the old system where no one cared about the settlement guarantee of the Bitcoin layer? I do think that, especially for companies like Kraken, we have been approached with different opportunities where we could decrease confirmation time, or we could decrease essentially the settlement guarantee that Bitcoin provides and the blockchains provide, and circumvent that process. We look at that from a very critical perspective. We don't want to take on any additional risk. The Bitcoin as a settlement mechanism is phenomenal. So I think there would have to be a really strong reason why not to use that. And I'm not sure if the reason is strong enough because, if a counterparty blows up, let's say PayPal and another company like Robinhood were transacting Bitcoin amongst each other, and they were going to settle, and maybe they left their settlement window too open. Let's say they settle once a month versus once a week or every 4 hours. If they did that and Robinhood defaults on an obligation to PayPal, that value could be larger than all the revenue ever generated from that relationship. So having them settle, I think is a thing to where there will always be demand to settle with Bitcoin's blockchain, because you don't have to trust your counterparties. So that's the fundamental premise. And I think no matter how much abstraction we add, that there will always be enough demand on that base layer for Bitcoin settlement guarantees.
I think it comes back to that point you made earlier too about how much security is enough security. I got two more questions for you here before we wrap up. And this one's kind of just a fun theoretical question. Recently, we've seen the central bank of Iran say that they're going to be buying Bitcoin from local miners, or forcing local miners to sell them the Bitcoin, actually. And we've seen Venezuela as well becoming increasingly crypto-friendly and looking at Bitcoin. Could you see a scenario where we actually see countries like the United States aggressively attacking the Bitcoin blockchain in order to prevent their geopolitical enemies from being able to use it?
It's a fascinating question. I think Bitcoin's ultimate test, I don't know if you've ever heard of this, but there's a term called the Great Filter Event. Have you heard of this term?
No.
It's in science fiction, or more in like astronomy, or like the study of like alien species in the universe. There's a term called the Great Filter. Why don't we see a bunch of Star Wars-esque, civilizations in our galaxy?
Mm-hmm.
We can see this, by the way, because we could see their energy displacement. If you build a Death Star, that's a lot of energy. I mean, we're going to see some very abnormal energy. We're going to see a lot of radio signals coming across our way. If the galaxy was like Star Wars, we're going to see a lot of activity. Now, we don't see anything. It's quiet. There's an idea that there's a great filter event that we haven't hit yet. And after this great filter event, no civilizations survive. A great filter event could be like antimatter weapons or nuclear weapons. I think it's a little pessimistic. I think the universe is just a big place, and I think we've already gotten past a great filtering event, which might have been like an asteroid hit too early in civilization's history to be able to survive it. Like, we're about to go colonize other planets. that window of human civilization totally disappearing is becoming very, very low.
Mm-hmm.
So I think there's similar events for blockchains, that there's the Bitcoin blockchain, these other blockchains, and how decentralized are these chains? Well, we're going to find out. When states start to attack these chains, we're going to figure out which ones were truly secure. Right now, there's been a lot of these chains are pretty weak security. There's centralized teams.
Mm-hmm.
There's all sorts of other structural problems and political issues. Well, I think this great filter event will be with the states. Which blockchains will survive the great states attacking it? Now, I do think a lot will look at it from the perspective of the enemy is my friend. So I'm a U.S. citizen. I would hope, and the United States is a good country, even though we have our flaws. I think I would rather have us than other countries succeed at doing this. I'm not a statist. I don't actually I believe in very minimal countries. So ideally we wouldn't have states, but since we have them, I would prefer that countries that are more liberal than less liberal, for example, like China, I prefer that the U.S. Be in a better position here. However, Bitcoin is neutral and no one can control it. So whoever wants to mine it or earn it or buy it and take a certain position are free to, whether that be Iran, China, or the U.S. So I think that we could see the U.S. push back on it. I think from a game theoretic perspective, the U.S. might look at it more of like it's a challenge. Like I would hope that we enter like state level mining, or like maybe there's subsidies given to miners and something like that, versus us just totally trying to penalize Bitcoin or trying to attack it. I would hope that we would embrace it, because I think either way you can't really beat it, but if you can't beat it, you should join it. And so that's what I hope the U.S.'s philosophy is, rather than going after it.
So JP Morgan's doing.
Right, and that's where it's funny, because there's a divide in the Bitcoin community of there's a group that are the privacy advocates, and of course I'm a huge fan of privacy, but some of them want certain things that would obfuscate or make it harder to calculate or verify the 21 million hard cap.
Mm-hmm.
I think that's an impossible compromise. We can never compromise our ability to verify the money supply. Bitcoin solves the problem of trust within monetary policy, and so. When we look at this, though, you look at these two sectors, and so the privacy folks go, okay, the way that Bitcoin survives a state-level attack is we all run full nodes behind Tor, we all use Bitcoin for like day-to-day payments, and we don't report our taxes, and we do this or that, right? Like that's their philosophy, and we all live in we have perfect privacy where like I've got an air-gapped Linux computer, and I use carrier pigeons for my signals, and I like that. I love that ethos. I mean, you can't get more Bitcoin than that, right? Like, hell yeah, all the power to you. It's just not very realistic from a survival perspective.
Yeah.
Like, Bitcoin will not survive because of that. Perfect privacy is almost impossible to do. How many people run a mobile VPN on their phone? Like, if you actually cared about privacy, it's a one-tap button. It's really easy. And so with, when we look at how do we survive a state-level attack, I disagree with the privacy folks. I love their ethos. I think we should definitely embrace privacy whenever possible, but I don't think that's how Bitcoin survives. I think Bitcoin survives when 20 to 30% of your population owns it. That would be very unfair. People would not be very happy with a policy that would ban Bitcoin when 20 or 30% of the population owns it. So I think Bitcoin's price speculation getting into more hands of hodlers, that's the way it survives. That creates the largest, strongest network effect that can resist these state-level attacks. You can't go into hiding in little bunkers in the wilderness and survive that way. We have to survive out in the open. We have to survive the viras and numeras. It's the strength in numbers.
That's it.
That's how Bitcoin survives, and so that's why I think it's even though some of these things like PayPal, you can't actually custody your coins. To be frank, you shouldn't buy with PayPal. You should buy from someone else where you can custody your own coins. But even if they can't, they still now have stored value of time and energy, their money, into Bitcoin, and now they're mentally captured to where they're going to fight for Bitcoin. They're going to fight for it because it's their money and it's their well-being. And so I think it become very unfavorable for politicians to attack it from.
Very, very cool. Dan, we've had just a tour de force here of Bitcoin conversation. This has been pretty amazing. I have like 5 or 6 more questions here. We could go for like another hour or two quite easily, but I think we're gonna wrap it up there actually. I mean, this has just been a very interesting conversation. So thanks for coming on and sharing your insights and yeah, it's just such an interesting time for Bitcoin in 2020. I'm just so excited what 2021 has in store for us.
Oh, I think it's going to be a wild year. I've been in Bitcoin for 8 years now. So when I say it, I'm excited about 2021. I mean, we've endured a long, a long, cold crypto winter. It's going to be a fun year. It's going to be wild.
It sure is. It sure is. Dan, thank you so much.
Thanks for having me, Lark. Always a pleasure. Cheers.
Thank you.